There is a shifting of some of the sector leadership that we think is not just a temporary blip here. It seems to be a durable kind of rotation that is likely going to play out over several weeks and months.
Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart, welcoming you here for a very special Thanksgiving week edition of the monthly macro and markets update from the gentlemen at New Harbor Financial. This is one of the financial advisory firms that Thoughtful Money endorses. You see these folks with me on the channel every week. I'm joined as usual by John Lodra and Mike Preston, the lead partners there. Gentlemen, thanks so much for joining me and happy Thanksgiving.
Same to
Hello,
you.
Adam.
Thank you.
Same to you. Glad to be here. Thanks for having us.
All right, guys. Well, look, lots going on. So, and we don't have a ton of time here, given that it's a shortened week, both in terms of the recording studio time we have here, but also just the markets are only open for about half the week. So let's dive right into it. Okay, so let's pick up where last week ended. We had a pretty notable reversion in the market last week with Nvidia. The markets had been kind of slouching. A lot of doubts were beginning to emerge in the mainstream financial press headlines about the sustainability of the AI trade. And everybody was looking towards Nvidia to kind of save the day, as it pretty much always has over the past couple of years. And Nvidia did what it always does. It released just gangbusters performance. It upped its forecast. So really just another one of these sort of fantastically good earnings results. And as Wall Street is wont to do, it reacted immediately and aggressively to that good news. It sent Nvidia up by about 5%, I think, in the aftermarket. So when the market opened the next day, stocks jumped. Nvidia was up 5. Actually, I think it got up to more like 6% in the early trading. But then the momentum quickly wore off. And throughout the rest of the day, Nvidia kept sinking, and then it actually went negative, and it closed down about 3% for the day. And there was a lot of consternation on Wall Street, a sense of like, oh my goodness, are we watching the peak of the AI bubble get put in real time here? And a lot of hand wringing going into this past weekend. This week, the markets have recovered a little bit, not a ton. So I'd love to get your guys' thoughts on that, which is, hey, was last week maybe a seminal turning point in the market? That said, I got a note here that it looks like the baton may be being handed off. While Nvidia is still a little bit weak here, Google is just on fire. And it's been on fire for a while, but this week it's really gone bananas. And a large part of the news driving that is Google's new chips. And Google is emerging as a chip competitor here to Nvidia. And one of the things about Nvidia is that it's kind of been like this, in this peerless category where just nobody could compete with it. And all of a sudden, it seems like there might be another, we might have a real horse race going on here. So why don't we start with this? Guys, how important is this? Which things are you watching most closely? What do you expect to happen next from here? John, you've been nodding a lot as I've been saying this, so why don't we start with you?
Yeah, great. Thank you, Adam. Yeah, Nvidia has been obviously a bellwether stock for as long as all of us can probably remember, and it has been raising some eyebrows of late. And you've rightly pointed to the kind of recent arms race of sorts between Google and Nvidia in terms of the chips and who's going to steal market share or keep market share. And might as well look at a chart because we always bring it back to the data here. So this is a daily chart of Nvidia. Sorry for the busy chart. I realize these dotted lines are residual from a working case study that I had with a prospective client that owns a very large concentrated position in Nvidia. They're actually worried about the stock position, but they've got large gains. So what these bars are, they were a hypothetical kind of collar hedge that we were talking about with this prospective client to basically allow them to kind of continue to string out the capital gains, but at the same time protect the downside and still have some upside potential. So I apologize for the busy chart. But the daily turnaround you spoke of is right here. This is the bar for last Thursday, which I think was I forget the date, the 20th maybe of November. and you can see we had a massive reversal. Popped in the after hours the day before on strong earnings beat and had a very notable reversal. And it's been weak since then. Here today we're down about 4% on the day. Stocks at 175. Pretty notable intraday reversal here, but this is what happens when there's been a bit of narrative about AI in general, but certainly regarding Nvidia. And I don't know certainly any better than the next layperson as to truly what Google's chips may or may not do compared to Nvidia's. But in some ways, it doesn't matter because the narrative is starting to change a little bit, and that oftentimes can be all that takes hold of price. And that's why at the end of the day, narratives and my chip is better than yours doesn't matter so much as the price action. And we're seeing Nvidia actually be quite weak and relative to a broader market. And I'll just share a chart of the S&P just to show you what that's done. So Nvidia is still healthy below its 50-day moving average as just one metric, whereas we've had a pretty sharp bounce in the S&P. This is SPY ETF that tracks the S&P 500. Had a pretty sharp bounce here. We're back above the 50-day, which is this green line, and actually have poked above the 21-day moving average. This got a pretty, this is a pretty notable sell-off because not just the indices, but the breadth and the participation indicators that we follow, things like bullish percents, the percentage of stocks above certain different moving averages, speaks to the narrowness of the market. That's turned down pretty notably, pretty quickly last week. Enough so that we culled some of the weaker positions in our portfolio. We reduced equity exposure by about 5%. Notably, we pulled back on financial sector exposure. But so far, we've had a pretty reflexive bounce here. I should note that the talking heads of the Fed were out in full force this day on Friday, and we saw a pretty notable reversal. And with that, we'll talk about, I'm sure later, the market expectations for a rate cut in December are back to raging, almost certain, right? So we'll talk about that. But we've had a pretty notable reversal here. Noting though, the volume's been pretty weak. Here we are in a notoriously thin holiday trading week, so it's hard to get a true read on the markets. But so far, we have to respect this bounce for what it is. Defending this 50-day will be important. We'll want to see some of our breadth indicators start to move higher, which they've started to inch back up. A little too early to call this sell-off averted, but so far the change in tone is to the upside, but needing some confirmation.
All right, so a few questions here for you, John. Put that chart back just up for a
Sure
second
thing.
here. So what I'm finding interesting about this, and you tell me if you're looking at it the same way, is when we look across the history of this chart here,
Mhm.
it's been the Mag 7 or the top 10 stocks that have really been driving the direction of the markets, right? Breadth has been very narrow at times, as we've often talked about, but it hasn't mattered so much because these hyperscaler stocks have been doing so well and they make up such a percentage of the index that they kind of push the index around, right?
Mhm.
Where they go is sort of where the index goes, regardless of what's happening with the other 490 stocks in the S&P. And Nvidia was the lead sled dog. In other words, there were times where the other top 10 stocks maybe weren't doing so hot, but whatever Nvidia was doing was where the market was going because Nvidia just had that much, influence in the index. What's interesting here is we're now seeing the index get a pretty decent bounce and Nvidia isn't. And I think it's largely due to Google. And maybe you can just put up enter the Google ticker there for a sec so we can see what's going on with Google.
Mhm.
I mean, Google, I don't know what the word for this is when you're this far out of the Bollinger Bands and everything like that. You're in a totally different stratosphere, maybe even a different solar system at this point in time. And we can argue whether this is merited or not. But what's interesting is it's seeming here that maybe there's a changing of the guard at the front of the sled, that maybe Google is going to become the dominant sled dog from here. And look, I know you've got an engineering background, John, so you probably understand this better than I. I'm kind of chagrined a little bit because I didn't really even know that much about what Google was doing in chips. Reading the headlines, this kind of caught me by surprise because I would have thought that before all of a sudden hearing, Google's becoming dominant in chips, I would have heard more headlines saying, "Oh, Google is beginning to become a challenge to, or it's aspiring to knock Nvidia off its top." Like, I didn't hear any of that. I just sort of woke up, the other day and it's like, oh my gosh, I guess Google's got these really cool chips that everybody wants now. I guess Facebook's placing a big order. That's why it's getting on the radar here. So anyways, I guess two things. One, do you potentially see a changing of the guard at the front of the sled? And two, is there anything you can tell us about these Google chips in terms of how they might differ from what NVIDIA's offering is?
Well, it's been a long time since I studied engineering, Adam, and even at that, my intention to study electrical engineering morphed into ultimately studying operations research, which is essentially engineering math applied to all kinds of business things. So my grasp of microchips, long since is left behind in the textbooks of physics class. So I candidly don't have an informed view there, but I guess I too was as a layperson, as much as perhaps you and your viewers, was surprised to hear that Google has these chips that apparently Meta, for example, has talked about. Hey, we're going to put some real force in purchasing into Google chips. So that was news to me, and that really speaks, I think, to the narrative that can matter as much as the reality in terms of price behavior. And you can see here, Google has absolutely been a positive divergence relative to not only Nvidia, but look at the whole technology sector. Here's a ETF that follows the technology sector. This is a more of a cap weighted one. Even the equal weight, so-called equal weight technology sector ETF, you can see this is a sector that has struggled of late. Compare that with sectors like healthcare, which have gone parabolic. This is kind of under the stealth surface of the markets. Frankly, we were in healthcare last year. We sold out, not too differently from where the price is now, but this has been a powerful move, one that frankly we would want to see pull back in before looking for an entry. But there is a shifting of some of the sector leadership that we think is not just a temporary blip here. It seems to be a durable kind of rotation that is likely going to play out over several weeks and months.
Okay, so you use that term rotation, which you and the other advisors I've had on the show have been saying that's something that if I've been taking good notes, you all sort of have been awaiting for the fact that we may start having some sector rotation, outside of just the big tech hyperscalers. We've had this bad breath in the market, as I mentioned earlier. It looks like we're starting to see that rotation, and actually it looks like maybe we're seeing some of that rotation inside the hyperscalers as well. Again, if Google is now kind of stepping into the top slot here. So I appreciate your candid answer there, John, about the technology. Obviously, I've got some Thanksgiving reading ahead of me and understanding, Google's offering here. I've read just a little enough to know that their chips sort of operate differently than the Nvidia chips, and I'm not even sure I can explain how. But I think they sort of tackle processing differently. And without knowing a ton of information, I think maybe, the NVIDIA chips are better for certain types of calculations, and maybe the Google chips are better for some others. I'm just going to ask the techies in the Thoughtful Money audience here, hey, if you've got any clarity to contribute in the comments, please do, so that we can all as an audience, understand this stuff better going forward. Mike, I'm coming to you in just a second, but just to wrap this up, what's interesting to me, John, is at the end of last week, there were some really nervous questions being asked of, hey, is the AI bubble just burst here? I think what I'm hearing this week is no, but maybe it's going to be driven by a different company, primarily going forward. Google maybe more than Nvidia. Now, who knows? We're in the first couple of days here of all this, so this could all change. But to your point about narratives, if you think there's a bubble in this market, bubbles are driven by sentiment. So sentiment becomes really important. And that was so interesting, what was so important about last week is people were starting to lose faith in the AI story. Well, that's going to impact sentiment negatively. It seems like what they're doing this week is not giving up on the AI story. They're just changing the story. Okay, well, it's not an Nvidia dominant story. Maybe it's a Google dominant story going forward. Again, we'll see what happens here, but it doesn't strike me yet that last week did mortal damage where investor sentiment about the AI trade has been materially injured here. What do you think?
Yeah, I think there is a bit of that actually, Adam, and we saw that in the broad technology sector indices start to turn down, even while Google, for example, has picked up some attention. So I think, look, the concerns that were raised last week, I think were legitimate, and not just last week, but these are concerns that have been increasingly voiced, in terms of the durability of the spend and kind of, part of the challenge here is that this whole financing of this spend has been largely in private markets. They haven't really been subjected to the discipline of public markets. Now, there's two ways to look at that. One might say, and I'm thinking of like companies like Blue Owl, for example, which is a private credit fund that we talked about last week as being in the headlines of being under some stress. And they did a lot of private lending specifically to the tech build out, the infrastructure for data centers and such like that. Now, there's two ways to look at that. On the one hand is, maybe private lenders can be a little bit more, forgiving and fluid in terms of, the discipline that public credit markets oftentimes display. But the other way of looking at it, and this is a cynic's way of looking at it, well, maybe it's really even worse than we think because it hasn't had that discipline of public credit markets, demanding the kinds of protection. So this story's got to play out a little further to have a clear read on it. But the fact that the broader tech sector is turning down, along with Nvidia, has me thinking there's more to the story yet to play out. It's
Okay,
not.
so
Yeah.
more maybe worry in the picture, but
Yep.
again, to my point, this doesn't seem to be the crack that some people, or doesn't seem yet to be the crack that some people were fearing it was at the end of last week.
Not yeah. I think we got a brief reprieve here that we'll have to see how this plays out. I think there's more news headlines to come that probably won't be of the rosy sort there.
Okay,
Google.
and last question on this, and before I come to you, Mike, and Mike, feel free to chime in on any of this when I hand the baton to you. Um, there's been a lot of volatility in the market. Again, last week, the market kind of took its lumps in some important ways we've been talking about here. Is this making you think that we're going to slump into the end of the year, or do you think, the Santa Claus rally, the year-end, general rally that we tend to have most years is likely still on? And the reason why I ask this question is um, there were some voices last week saying, "Hey, this is it," and I just might want to give folks a little bit of caution to say, "Hey, I'm not sure we can conclude yet that a run higher into the end of the year isn't possible at this point."
Yeah, well, we've regained the 50-day, some really important technical levels in broad indices. If we keep those, very likely there could be a path of least resistance higher, especially as you got the expectations for rate cut back firmly on the table. We've done a round trip. I think a month ago there was a 90% expectation of a quarter point cut in the December meeting. Then it got down as low as 30%. And then the Fed heads came out on Friday, including Williams, which was, a very powerful speech saying, hey, basically that rate cut isn't off the table. And here we are, I think today, almost 90% odds again of a rate cut in December. So that's been a complete end-to-end kind of whipsaw in terms of rate cut expectations.
Yeah, I'm just pulling up the chart here so people can see. So right now it's 85% probability of a 25 basis point rate cut next week. But to your point, John, if you look at it a week ago, it was at just 50%, right?
Yeah.
So, all of that, Fed speakers, plus I think just some of the weakness that we talked about, got people a little bit more spooked saying, hey, the Fed probably is more likely going to have to act here.
Yeah, and look, a month ago it was 92%, and I think it got as low as 30% odds just within the last week or two. So it's pretty much gone both ends of the field in that regard.
Yeah, and I'm just curious on the why it went so low. I know one of the arguments for it was, look, the Fed's flying blind because of the government shutdown. And so out of an abundance of caution, the Fed was saying, or people were thinking the Fed was just going to say, look, we're not going to do anything until we start getting some data, some more recent data that we can trust. And I kind of ish get that argument. Were there any other compelling arguments, data-wise or otherwise, why the Fed wasn't going to cut?
I think it starts with the last Fed meeting. At the last Fed meeting, they announced the cessation effective December 1st of quantitative tightening. But they also basically said, to paraphrase, by no means is a rate cut at the December meeting a foregone conclusion. They pretty forcefully walked back the market's expectations on that. And the narrative coming out of the Fed heads, these are just people talking, and it's amazing how much influence they have on markets and market expectations. But it is what it is. on the hawkish side, I would say. And then just recently, we saw kind of a bit of a pendulum swing back in that direction by Williams, who's a pretty influential, voting member.
Yeah.
And I think the market's starting to look at the Fed not as, hey, what Chair Powell says is what the forward guidance is, but now there's actually dissent. There's differing opinions. There's different votes. We've seen dissent start to emerge in this body that hasn't been present. So now it's I've heard some people talk about it like, hey, now it's really about vote counting. It's not about what Powell says. It's about counting the votes
Right.
as to
Well,
what might
Powell
happen.
is, I think, increasingly viewed as a lame duck at this point, right? Because his tenure's up in 6 months or so, right? And then also, we'll talk about this in a moment, but um, there's some speculation that there's some jockeying going on the FOMC for Powell's job, right? And they're trying to curry favor with the administration, saying, "Look, I'm happy to bring rates lower, but it's this current chair that's getting in my way."
Candidates for a job will say a lot of things to get the job. Let's
Yeah,
put it that way.
exactly. Exactly. All right. Hey, Mike, thanks for being patient. We're going to trundle over to you here. First off, anything you want to add to what John said there before I change the subject?
You guys covered a lot of stuff. Talking about the Google chips. Google makes chips for their Pixel telephones, right? And I think it's called the Tresor, the Tensor chip. And so yeah, their chips are in their phones, and I really wasn't that familiar with the fact that they were a leader in chips and that they were a competitor to Nvidia. And so there's been some negative news out about some changing to Google chips instead of Nvidia, and that's been weighing on Nvidia. But I just want to go to a Google chart for a moment just to show you how fickle the market is, because I follow this company pretty closely, Google, in terms of its technicals. And early in the year, we had this sell-off. This is a weekly chart. Okay, so just bear that in mind. We went from about 200 on Google down to about 140. And the real headline during this time was that AI was going to make Google obsolete. Really. And the sell-off was really severe. We went down to the 200-week moving average. And then since then, we went from about 130 on the stock up to 323. That's 2.5x. We go a little higher, it'll be like a 3x. And so the market was wrong there, and everyone was really kind of nervous about Google for the wrong reasons, and now it's a market leader. So, that's one thing that I
Yeah.
wanted
And
to
let me
mention.
just note, because I did the math yesterday. So since the April lows, that's over 2 trillion in market cap added in like 6.5 months.
It's incredible. And I'm not an expert in these chips, but I do know this. And guess who makes Google's chips? And guess who makes Nvidia's chips? Taiwan Semiconductor.
Hmm.
And so these guys, they design chips, but they don't make the chips. They're manufactured in Taiwan by Taiwan Semiconductor. But it's just a huge, huge move. And Nvidia, I wouldn't put a fork in Nvidia yet, to be honest. It is a little weak. It's down 4 weeks in a row. If I went to the day chart, you see what's going on here. We had that massive swing last Friday, and I can tell you that was really emotional for a lot of market participants. Even me, after all these years of experience watching it, it's like, wow, did we really pop like that? And then it was just like, not just on Nvidia, but on the S&P or the QQQ, it was down like every 5 minute bar all day long. And it was like a 7% top to bottom swing in the Qs, 5% top to bottom swing in the S&P. But if I just go to the S&P for a moment here, SPX, take a look at this. We broke the 50-day on Friday, a big, big negative thing, but then it was straight back. One, two, three, 3 days straight up, and now we're at 67.50, which is a critical level because it's basically the top of that, I guess, this bar there on 1120. Um, and so if we break through that, that's the big red bar. We could easily, if we have a big up day after this on any positive news, we're going to be gunning for the highs. And as much as people were fearful here, and you could feel the fear that day, they're going to be feeling fear of missing out again. That's how
The, the,
crazy
the,
this
the, the
market
greed
is.
the greed fear meter, I went and looked at it. It goes from 1 to 1 or 0 to 100. It was down at 6. That
Yeah. And
it's
we were like
about as miserable as you can get. Yeah.
5.5% off the top. That's how compressed this market is. But at the same time, if you can read that from a contrarian standpoint, that the tank was filled again, or the barrels were loaded with that fear that got so extreme so fast. And now look what's gone on. If you shorted the market or if you got out here, you're feeling it right now as we're, hitting this 6750 level. So I'd say the 6750 level is critical. And then from there, about 100 points higher, you'd be right at the highs again. So if we hold here today, and in the next couple of days, by the time your viewers see this, it's gonna be right around Thanksgiving time, maybe a little after. I'm not sure exactly when they're gonna watch this. We could be literally plumbing new highs again. So we saw our indicators get negative. We took some action. We shed 5%. It happened to be in the financials. We're down to 40%. If we had continued lower, we would have started to take more and more stops and thereby reducing our equity exposure. We have S&P puts down at 6,300 on 15% of our notional exposure, so that would have dropped us further. But the way it's turned out is we're actually reacting to the upside. And if we continue and we run for the highs, we'll start adding fresh equity. We'll probably add that 5% right back. I think as John pointed out earlier, there's new leaders emerging, like biotech, pharmaceutical. Those are two big sectors. Other things like metals and mining, we already have some exposure there, but there's some really good activity going on there in base metal type companies. But the big surprise really has been pharma and biotech over the last few weeks, so we're watching that closely. Nvidia is well known to be the first $5 trillion company, right? But guess what? Just the other day, or maybe it was yesterday, Eli Lilly was the first $1 trillion healthcare company. And so, if I could share once more, I guess I'd like to just show you how crazy it's been in that space. I'm
Yeah,
still on SPX.
pull it up because you're excited about those sectors because they are at technical breakouts, right?
That's right. Well, here's Eli Lilly. I mean, honestly, it's run too far to jump in right now, I think. But that's the daily chart. Here's the monthly chart of Eli Lilly, the first $1 trillion company. But the things that we would look at are ETFs to follow the whole group, like XLV, healthcare. If I go to the monthly, weekly chart, even, it was a real dog for a couple of years, right? We were in it earlier and out before it fell, and then just out of nowhere, it came back. Or IBB, which is an iShare for biotech. It looked terrible, and then boom. I wish we had got in on this big base breakout right here. And we were looking at this plus oil service sector. We happened to add oil service sector. And this one took off, and it doesn't mean it's too late. It just means you're going to want to wait for some kind of pullback here at this point. And pharmaceutical, PPH, if we zone in on that on a weekly, look at the pharmaceuticals. Big, big base breakout. And so most people aren't even talking about these yet. I'm not saying jump in here, but we always have to be thinking about new leadership. Technology may be slowing down. And by the way, if the S&P goes up to make new highs and continues for the next couple of months in some sort of either mini or major blow off top, technology will follow, but it won't necessarily be the leader. So sectors are always, always shifting. And so we're always looking at different sectors, and we're basically trying to pick the strongest relative strength sectors out of all of them. In financials, we're laggards. We got rid of them, and we'll might very well add one of these back very soon, particularly if the S&P makes new highs and our internal measures or our indicators reverse up, which they're close to doing.
Okay, so you guys are essentially poised to move capital into these sectors if they continue to behave the way that you hope.
Yeah, absolutely. But we don't have to be all in and we don't have to worry about getting it exactly right. We're much more likely to do things incrementally. We'll add 5% on a breakout. We're not afraid to pay higher. We've learned over the years that that's the way to do it. That's how professionals do it. You don't go all in one thing where you have to be right. You do things incrementally. Like I said, we took off 5% last week. We would have continued to take off another 5 or 10 or 15% if the market worsened. That's because we've got a viewpoint. We're in a hyper overvalued market that's very dangerous. We don't want to be adding on the way down in this environment. We want to be reducing. And that's the professional thing to do. A lot of people will start layering in more and more in a down market, and that can often work as long as the market keeps coming back. But in this market, we want to be very careful about doing that. But having said that, it looks like the market's wanting to reverse up, And we're looking for like some kind of follow through in the next couple, maybe the next week or so. If we have one more big up day, maybe 100 S&P points to the upside, we'll be knocking on the door of that new high, and we will add back equity. But we're not going to be 80 or 100% equity in this environment because this regime is just too dangerous. We're probably going to top out at 45 or 50%, something like that.
Okay. But is it fair to say, Mike, that from your perspective, in 2026, again, the AI trade has been so dominant for years now, and the market has been on a relative basis very narrow. Again, that bad breath we're talking about. That you think a theme of 2026 is going to be capital rotation. Doesn't mean the AI trade might not still be going higher, but potentially it's getting long in the tooth, and capital is starting to say, where can I get more upside at a better risk adjusted or a better risk management situation? And that might be what we're starting to see now in some of these other sectors.
It seems like market participants are demanding better valuations. That's what it seems like so far. We've said a bunch of times, though, that it's feeling like this market wants to have some kind of event to put a top in at some point. And who knows? We're deep into a fourth turning. We talk a lot about fourth turnings. Well, we know that every fourth turning ends with certain things happening. And there's certain stages of the fourth turning that we don't think have happened yet. We agree with Neil Howe. We think he's right. We probably entered this fourth turning in 2008 or so. And we're probably in the final 5 to 6 or 7 years. And so the two things that happen in every fourth turning that haven't happened yet is a crisis followed by a climax. The crisis is probably going to be a stock market top and crash, and the climax will follow a few years later. And who knows what that will entail? It could be a whole lot of different things. But so it's seeming like this market wants to coil and have some kind of blow off top. If that happens, technology will go up too. I'm sure of it from here. But it may not go up as much percentage wise as some other things. Maybe biotech will double. Who knows? I'm not making a prediction, but maybe it would double over the next 6 months and technology would go up 20%. I'm just making numbers up.
Mhm.
But you have to take a look at your screens. We have momentum screens. We're always looking at chart patterns for what are the strongest, who are the leaders. And consistently in that leader group right now are still gold miners and silver miners, believe it or not. And that's a good sign. We can talk about that in a minute. But it has been technology in the past, but they're starting to fall off that list, and more medical and biotech and pharma names are coming in.
All right. Hey, let's move into the gold and silver side of things, and if we can, let's contrast gold with Bitcoin. There's a little bit of a tale of two stories going on here.
Hmm.
You just mentioned that you think the precious metals are still well positioned here. And I will note with that market volatility that we've seen over the past couple of weeks, a lot of things sort of sold off, and gold and silver weren't an exception to that, but they did stay above key resistance levels. Gold never really got below 4,000. I think it did maybe really briefly, but barely. And same thing with silver with 50. It got below just a tiny bit, but they've largely stayed above, and now they're rising again this week. They've had a pretty good week so far this week. I just interviewed Michael Oliver, who is very bullish about the precious metals, and he put up a bunch of charts. Um, these sort of, he's a momentum analyst, and he looks at a lot of different ratios. And he was sort of circling on his charts where gold is definitely broken above a multi-year trend line. The miners and silver are poised to, and looking at how they're going to close this week, they might actually be in breakouts as well by the end of this week. So he's basically saying, hey, this is a game on moment for the precious metals. Do you feel similarly, Mike?
I agree with him, Adam. I'd like to talk briefly about gold, silver, and the miners, and then also about Bitcoin, and I'll try to wrap it all up.
Yeah,
Let me
and of course
start.
the key question there is why is one doing so well while the other's been
It
struggling?
doesn't make much sense. I'm a little bit puzzled myself, to be honest. And we have admitted that Bitcoin has proven itself from a chart perspective. The blockchain is a magnificent thing. And I'm showing IBIT here, iShares Bitcoin ETF. It's one of the more popular ones. Let's take a look at a weekly chart. So this is essentially a 3-year chart. And Bitcoin based out in 2024 and had this big breakout here. A lot of people, maybe they remember this. This was right around the election time last year, we were around 65, 70,000 Bitcoin, and then it went right up above 100,000, came back down to maybe 70,000, and then shot up to this more recent 126,000. So this is not spot Bitcoin price. This is the iShares Bitcoin ETF, but the shape of the chart is the same. This drop is pretty severe, 72 to 47. I mean, it's like basically one third. Bitcoin lost a third of its value in 6 weeks. That's not the first time it's ever happened. In fact, it happened late last year, or into early this year. But this was actually a little less severe than the more recent one. And I don't have a chart that goes way back. I mean, Bitcoin has some history of losing 80%, right? And so a lot of Bitcoin people say, well, that's just part of the gig. And maybe it is. But as a technology, a currency, a store of value matures, then the volatility should compress to be less and less. That's why this particular drop is a little surprising. If I had to guess, I'd say it's an opportunity. I'm with the Bitcoiners on this one. I think it's probably an opportunity. I've always had trouble completely embracing Bitcoin because it's hard to really understand, right? It's not physical, it's a made up thing. And there's hundreds of other Bitcoins that are just made up as well. So, how do you know what's real here? You can't hold it. Well, to me, it's proven itself to be a store of value just by its persistence and its chart patterns, etc. What sometimes concerns me about Bitcoin and crypto is the zealousness, that or the zeal that the people in that space believe. It's like all in or nothing, and we don't feel that way about anything. I think you can have Bitcoin. I think we don't really need to have Bitcoin, or our clients don't, because we recommend that they have 5 to 10% physical gold and silver, and that's probably good enough. But if they want to have Bitcoin on top of that, I think it's proven itself. I think this is probably a an opportunity, but geez, I would be careful. I wouldn't go in big. And there's other things in the space that have just completely fallen apart, like MicroStrategy, or formerly MicroStrategy, which is now Strategy. It's gone from 450 to 150 roughly in just a couple months. So it's lost two-thirds of its value. And I was just looking at this the other day. It's actually below its net asset value of its Bitcoin holdings now. So it's probably an opportunity. Who knows? I mean, this the head of that company is a little bit out there in some of the ways he talks and his predictions. I would, if you're going to do anything, I'd probably stay with Bitcoin itself. So that's what's going on. And part of me wonders how much of this meltdown was connected to this sell-off in AI in tech that we saw. I don't have any evidence to back that up, but it really seems like this kind of meltdown started and then it spread through AI, and then we had, a pretty rapid tech sell-off,
Right. Well,
and it's now
I mean,
trying to find a bottom.
technically, Bitcoin's price action is pretty correlated with the Nasdaq.
Yeah, absolutely. Yeah, I don't have the charts prepared to show that, but I think that's probably true. Now, let me now compare that to gold and silver, which, if you remember back, I don't know, 6, 8 years ago, Bitcoin was going up all the time and gold and silver were lagging. It was really frustrating. And now it's the opposite. Right now, it's the opposite, which is strange. Here's silver. Here's a silver weekly chart. These are all ETFs, by the way, versus the spot prices. But you get the picture. On a weekly chart, silver is putting in this high triangle. It had this triangle back here on this triple top breakout at 35 on spot that we were talking about every week, and it went right up to 50. And if you compare what happened here, let me just go to the monthly chart. Back to 2011, back in 2011, silver sold off from like 50 to 30 in a month. This time it's persisted at least into the second month. We touched 50. It's still up here. If we base out some more and break higher, it's going to be decidedly different than what happened back in 2011. And I know you've got to adjust for inflation, and I can't go back this far on the chart, but silver hit 50 in 1980 with the Hunt brothers. It hit 50 in 2011, and it hit 50 now. Silver seems to be, and again, if it breaks out higher, let me go to the daily. Here's this triangle I was talking about. It's forming this big triangle versus collapsing. I think that's really important. And if it comes out of this triangle to the upside, it's going to go even further. And the miners should finally wake up and say, you know what? We are completely undervalued. So take that's silver. Let me look at gold. Same thing. Gold went up to 4,400, pulled back to 4,000. It's been dancing around 4,100. It's up around 4,200, and it looks like it wants to break out. Hasn't yet. But then look at the miners. I'll go through each of the miners here. GDX, for instance, boom, there's the triangle. We just broke out today.
Mm.
Now, it's not decidedly. I'd like to see it go above 80 on GDX to really be, more obvious, but it's trying to break out of that triangle. GDXJ on the juniors, it really is kind of a sloppy triangle. It's not as obvious, but still it's firming up. Take a look at the juniors, silver juniors. They had a big sell-off, 27 to 20. That's 22% in just 2 weeks. I mean, that's almost as big as the Bitcoin drop, I guess, of 30%. But yeah, it's firming up here. It's having a nice up day. Take a look at the silver majors, SIL. It's forming its triangle, hasn't broken out yet. So watch for these triangle breakouts. Our work says that in general, miners still are performing better than metals. And within the metals, silver is performing better than gold. So if you're going to buy bullion and you want to have, the best performing asset, you'd be buying silver. There's caveats to all of this, of course. And the miners should do better. And we're watching for an imminent breakout. It'd be nice to see. It's just we need a little more confirmation.
All right. Well, look, we'll have you tracking this for us every week, Mike. So you'll keep us, updated here in real time. But a lot of folks watching here, I'm sure, are eagerly hoping that you're correct here and that these things may be breaking out to the upside from here. All right, we only have a couple minutes left. John, let me come back to you real quick. Just a quick gut answer to this. So suddenly, and hopefully, we're seeing some headlines in the news that a Ukraine peace deal may actually be in the works here. I think too early to say with any certainty, but there's been a 25 or 28 point plan that's been circulating over the past couple of days, and it's funny, it shows why you shouldn't rely on headlines. Yesterday there were a whole bunch of headlines saying that this looked like it was a Russian list and not even a U.S. list, and Ukraine had said absolutely no way are we going to agree to this. Then all of a sudden, past 12 hours or so, it looks like Ukraine has agreed to a lot of what's on the table. So let's all cross our fingers and hope for global stability and world peace and saving people's lives, that there is a peace deal in the offing here. Market hasn't really seemed to react to it much. Would this be a market moving event or not? I've asked this of a couple of other of Thoughtful Money's financial advisors, and they've largely said no, it's not really something markets historically have traded much on. But do you have a strong opinion one way or the other?
Not a strong opinion, but my feeling or my gut check is it probably won't be much of a durable market moving event. I don't know, even though it's fresh headlines, I don't know the outcome or the details are that relevant to what the market's been pricing in and hasn't been. So my gut is that no, it's not likely to be a meaningful event in the markets.
Okay. Doesn't mean we can't all hope for it though.
Oh, absolutely.
Um,
Life is
and
not
then,
markets. We know that. We should know that and remind ourselves every day.
yeah, yeah, very well said. All right. And then just in wrapping up here, you guys, past couple of weeks when I've had you on, as we've concluded the conversations, you have reminded the audience that the end of the year is coming up fast, and there are a number of year-end steps that are wise to take, and in some cases, people really need to take them, like maybe your required minimum distributions if you're
Mhm.
above whatever it is, 72 or 70 and a half, whatever it is these days. And time's running out fast. And the reason why, folks, is because yes, we have less days left in the calendar, and they're going fast. But also, the closer you get to the end of the year, the harder it is to actually get these steps effected. So obviously, financial advisors, they're getting crushed with everything they need to do with the end of the year, and everybody calling them in a panic who procrastinated, saying, "Please help me get this done." But John, you were saying, I think last week that that Schwab and Fidelity, they get bogged down. So even if you as the advisor have some capacity to help the person who calls you, if it's too late in the year, Schwab might actually not be able to process everything by the end of the year deadline. correct?
You don't want to wait till the week between Christmas and New Year's if you can all help it. It just doesn't leave a lot of runway for the inevitable once in a while hiccup on the operational side. But the great thing is you don't need to wait that. Most folks should start to have a handle on where they stand on the year and the things that need to be done before the end of the year. We've got plenty of runway still yet. These are always the things we talk about. The ones that really are kind of on tops of our clients' mind of late are things like Roth conversions, which have to be done before the end of the year. They can't be put off until like tax filing deadline of next year, like regular IRA contributions can be. There's some new little wrinkles here. We won't get into all the details, but for example, as a result of the Secure Act, I think it was called 2022, there are what are called super catch-up contributions that people ages 60 to 63 can make. So most people above 50 can make the Roth IRA or IRA contributions or retirement plan contributions. And then there's these but this actually really relates only to corporate retirement plans like 401ks, 457s, 403bs. For folks between 60 and 63, they can make a super catch-up where I think it's 11,250 versus 7,500. So folks that really are needing and wanting to play catch up, think about that super catch up contribution in their employer sponsored retirement plan. And then another little wrinkle, some for people that are above a certain income level, that super catch up has to be made as a Roth contribution, it can't be done as a pre-tax. And these are all just nuances that, if you spend a little time and dig in, they're pretty straightforward. But point is, get your attention on it now. Don't wait for the end of the year and last minute.
All right. And I'm going to say for most people, there's nuance here, right? So rather than trying to figure it all out yourself in a panic at the end here, reach out to your financial advisor. If you don't have one, talk to one of the ones that Thoughtful Money endorses, and just say, hey, look, this is my situation. What are the things that apply to me? What do I need to know, right? And so I want to commend you guys because you put together, what I thought was a really helpful summation of these year-end steps. And you let me kindly share it with the Thoughtful Money audience. I did that by putting it into the Thoughtful Money Substack. So folks, if you haven't read that yet and would like to get your hands on it, you can just go to thoughtfulmoney.com/newsletter. You can sign up for the free Substack. It's one of the most recent posts that's there, so you can go and get it that way. Or obviously you could talk to the guys at New Harbor yourself directly. And to do that, you can just fill out the very short form at thoughtfulmoney.com and schedule a conversation with them. And of course, you can do that around these end of year last steps, but you can do that around just anything related to managing your wealth for you. End of the year is always a great time to try to set yourself up for success in the coming year rather than delay and have to scramble once the new year's here. So anyways, John and Mike, thanks so much for another great week. Folks, please show your appreciation for them making time to do this on their busy Thanksgiving weeks while they're still helping clients and trying to make some time to have some turkey with their families. So please help me thank them by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it. We've only got like a minute left, guys, but just real quick, I'll go to both of you. What are you guys especially grateful for this year? Mike, why don't we start with you?
I'm grateful to have this platform, and that's thanks to you, Adam, and maybe thanks to all of our hard work together throughout the years to
Absolutely. It's a team
accumulate,
effort.
absolutely accumulate the wisdom and the experience that actually allows us to help people through this time and the time that's coming. It's not easy. It's all psychological. The Fed designed it that way. We're really good at helping people through that. I feel like we're in the right place at the right time. Thanks to all of our hard work and thanks to you. And so thank you very much.
My
And
pleasure. John, how about you, buddy?
couldn't have said it better than Mike just did. I'll add the thanks to our great team here. We've been fortunate to have surrounded ourselves with great colleagues that were caring and professional, all the same. And I'm just really looking forward to the market being closed for a day and a half day on Friday. And, I'm really looking forward to spend some time with family and friends and just enjoying what we are all here to do. Just be good to each other and be thankful for what we're blessed with.
All right. Well, very well said, gentlemen. I'm very grateful for your partnership and your friendship. And as Mike said, we've had this going on now for what, a decade and a half or more. Hopefully, we've got several decades still ahead of us here. But I wish you guys a great Thanksgiving with your family. Same to everybody watching. And I just want to reiterate something I think I said in this past weekend's video, which is, um, I always talk about how the key forms of wealth are relationships, purpose, and health. We got a real chance here at Thanksgiving to work on our relationships with the people that we care about most. We care about them most because we're spending, our sacred and limited holiday time with them. So might be a good idea while you're gorging on the wonderful food at your Thanksgiving feast that maybe you go on a fast on your digital devices for the day. Maybe we make Thanksgiving this year a day without a device. So with that being said, gentlemen, thanks so much. Great week. Like I said, hope you guys have a great holiday and we'll see you next week.
Goodbye, Adam. Enjoy. Thanks.
You too, Adam. Thank you.
All right. And everybody else, happy Thanksgiving. Thanks so much for watching.